Okay, here's a look at the eMini S&P for Monday, August 30th, 2010. Yesterday when we had, or I should say Friday, we were mentioning that the 64 area, if the market could hold above that, that would be a bullish scenario. These, of course, are the market profiles. This is Friday, today, and this is what occurred overnight. So as you can see overnight, the market opened in here, quickly shot up, spent a lot of time up above 64, and then later in the session, in the overnight session, came back down below it. And during the open of the regular trading hours right here, it was below it. It went up and touched onto 63.50, just a hair below our resistance, and then sold off for the rest of the day. So we knew that the market had to hold above 64 in order to switch over our intraday bias to long, and it couldn't do that. So we were still short with a short bias going into today, and as it turned out, the market that opened around 61 or so ended up by closing right down near its low around 45. So this bearish bias on the intraday remains, and we're looking at in the area of that once again around 46 to see if it can hold there. If not, then down to the 37.38, and if not there, then down much lower. So that's things really haven't changed too much in that regard. Still needs to hold above 64 in order for the market to turn bullish on an intraday basis. Of course, we also like to use the I don't have it here today. There it is. The profiles from the regular trading session, and we use those also in our analysis. So as far as our trades were concerned, here's our software. You can see where it shows the up and down arrows. We had a short in here, did hit our first objective, did not hit our second. These long trades that you see right here, we had several of them today as the market tried to work its way lower. And as you can see, none of these were taken. They were all in the red filter, and of course that's in conjunction with our intraday bias as well. These two here, this one and this one, were triggered in the gray, but when we're in an intraday down, we will not take a signal against the intraday auction when we're in a neutral or a filter against it. We might take it if the filter is with us. So none of those long trades were taken. So this short trade was taken. That turned out to be a break even. It did come within one tick of our second objective. The second trade here, we weren't actually filled till here. It just nicked us right here, unfortunately, for a stop out before it fell off again. And believe it or not, this same trade over here did the same thing. Right in here, just nicked us right here, and then of course had a good sell-off for the rest of the day. So a little disappointing in that regard. Those short trades were certainly on the right side of the market, but our trade location, especially in that second and third one, just got us nicked one by one tick, one by two ticks. The first trade did reach our first objective, as I said, and came within one tick of the second objective. So we're still looking for the market to head lower. We're looking at that 46 area. The next area up would be around the 52 area as likely resistance heading into tomorrow. So watch for 52. If it can stay below 52, remains bearish. It will remain bearish on an intraday basis as long as it stays below 64. But if it moves above 64, it'll switch to bullish intraday bias. Going above 52 tomorrow would just it would make it more intraday bullish, not intraday. So those are the numbers that we're looking at. We still have the down preference. So thanks for taking the time to check out our video. Any questions or comments, please get a hold of us at info@eMiniDayTrader.com. Thank you very much, and we'll see you again tomorrow.